Jack Kopnisky, Sterling Bancorp. It's up around 14% year to date. You beat the street in your third quarter earnings report. I think it was about 2 weeks ago. So how are you doing it?
We're doing it by focusing on very specific segments. So, one of our beliefs is that you can't be all things to all people as a bank. You've got to focus in on a certain segment and be great at that segment. So add value to the clients in that segment. So we focus on small middle market businesses, and we've done a very good job of executing against our tactics. So we have a very strong set of values that delivers results, and we want to be consistent in delivering those results.
And that was your first full quarter since the Hudson Valley Bank merger. Can you talk about the integration of HVB?
Sure. We've, as a group, we've done a lot of M&A activity over the last 4 years. So this is our fourth transaction. It's been a great process to go through. We've been very systematic in our process of here are the objectives, here are the tactics, and we execute against them. So we're actually ahead of plan in terms of getting the delivery of cost reductions and, frankly, revenue gains. So what we've been trying to do in all these acquisitions is create positive operating leverage. So how do you grow revenue at 2 to 3 times the level of expense? And Hudson Valley is a great example of the opportunity before us to do that.
What's the middle market lending environment like right now, especially with rates set to rise? They have jumped. The 10-year is going from 2 to 2.3%.
Sure.
So what's it like right now? Are people rushing for money?
No, I don't think people are rushing for money, but there is an opportunity to lock in rates now relative to the proposed increase in rates as we go forward. But it's a competitive environment. There's lots of people providing, wanting to provide credit. One of the challenges is making sure that you stick to the fundamentals of credit, which is really the biggest risk in banks. And we've been very deliberate in sticking to what we know works over the long term. So where there may be a rush for credit, we want to make sure that it's the right credit background of a company to provide the service to.
Another challenge we heard a lot about during the presidential debate is the fact that smaller banks are being weighed down by excess regulations. We heard a lot about Dodd-Frank being onerous during the Republican debate the other evening. Mm-hmm. How is it affecting you? Because you have to compete with some big hitters here in the New York area.
Sure. So, what we've built is a company that's now $12 billion in assets. You do have to have a critical mass of assets and earnings and revenue to be able to afford the cost of regulation. So really small banks, I think it's really tough on them. Banks less than $3 billion in size, because they're required to do similar types of things that everybody else is required from a regulatory standpoint. So our view is you had to get to about $10 billion in assets to be able to be effective in the economies and scales that you created on an earnings side, but also to be able to afford the cost of regulation and, frankly, the cost of technology, because that's an equal part to the cost of regulation. Clients have changed. They want to use more technologically advanced methods of providing financial services. So you have to invest in those areas also.
Well, that said, is it creating an opportunity for you to be aggressive in terms of M&A? Because the big banks are being dissuaded to get bigger, from what we hear on the campaign stump. Meanwhile, mid-level banks like you can really snap up a lot of the smaller players who are being affected or being weighed down by the regulation. And I know you're out there shopping.
Sure. So we look at it in 3 buckets. So first, we have a model that enables us to grow, low double-digit EPS a year organically, just by creating higher levels of productivity, creating more operating leverage. The second part of it is we are looking at commercial finance companies to acquire. So we have a very strong commercial finance business. We're looking at creating economies of scale in those businesses. And the third area, and it's more distant, is bank M&A. As we've learned over the years, there are lots of opportunities to create financial transactions that benefit, but it's also the cultural piece that matches. So there's only a certain amount of banks out there that would match from a cultural standpoint to be able to create the type of model we want in the future.
All right. Well, thanks a lot, Jack.
Yeah, thank you. Thank you very much.
And thank you for watching The Street.